We'll understand little basic. There are few more people yet to join. So let's say any business you take, either they are into selling the product or they are rendering the service. Their major objective is to earn the profit. To calculate the profit when your business is very small business. Let's say I have seen my uncle, he is doing farming, he is doing cauliflower farming. So he has only one dealer comes and takes all his flour. So he is maintaining in the notebook. He is calculating his profit very simply. How much he is selling and what is his cost is equal to his profit. That is how he is maintaining his accounting in the notebook. But I'm just imagining if he grows his business, if his business grows, he'll definitely not be able to manage in the notebook because his number of customers will increase. For some customer, he'll give 30 days credit period. For some, he'll give 40 days credit period. He will not remember in which uh, land when he has to put the pesticide, fertilizers. He'll not be remembering how much raw materials are available, what raw material he has to purchase, which raw material is going to finish when. He will not remember all this thing, and it is very difficult to maintain everything in the notebook. So he may move to Excel sheet. Then if his business grows little bigger and bigger, if he start farming in different location, then again that may also not be possible to even handle in the Excel sheet. Then he may move to Tally or QuickBook or some other softwares. Now if he open multiple branches, then you will have different departments also. You will have purchasing department separately, you will have production department separately, you will have finance department separately, you will have legal department separately. And to manage all this different department, he may have again different softwares. But having the different software for different department is quite risky. It is difficult to manage. So once he will have lot of cash, once his business grows, he may think to have some integrated software which can give him the real-time data of all the departments, of all the branches, of all the countries by using a single software. That is where he will start looking for the ERP, or he will be looking for the software which can meet his business requirement. So in the market, there are a lot of softwares are there. It is not necessary that he has to use SAP software. He can use Oracle, he can use Syspro, lot more. Sage is there. Lot of softwares are there. He can use lot of softwares. So let's say he discussed, he considered multiple points. He considered cost, security, user friendly, budget, lot more point he considered, and he decided to use SAP. So SAP will meet all his business requirement. Okay. Now from any business, I just given the example of the P&L statement, but the outcome of the business is not just the P&L statement. Along with the P&L statement, they have to prepare other so many financial statement, so many other reports also. But as I said, if my SAP is giving P&L statement, if I use Oracle also, that will also give same P&L statement. If my SAP is showing that your business made 100,000 profit, Oracle will also give 100,000 profit. Your profit and loss figure will never get changed just because of using different ERP. Maybe the process of deriving that value will be different. That is where people run one after another ERP which suit their business requirement. But the ultimate figure will never change from one ERP to another ERP. If I sold one laptop worth of rupees 100,000, whichever software I use, my sales figure will be 100,000 only. That's what I'm trying to tell. Okay. So these are the financial statement generally any business is expecting from the ERP. Whichever ERP use, generally they are expecting your P&L statement, your balance sheet, your cash flow statement, your statement of change in equity, and your note to auditor. Now, along with that, there will be a lot more other reports. So keeping this all this in their mind, they will look for the right software which can meet their business requirement. Now let us focus what is called income statement. So everybody knows that income statement will give the either net profit or net loss for the year or for the period. Income statements or profit and loss statements are prepared for the year. You always try to calculate the profit or loss from this period to this period. That's the reason if you look at any company financial statement for the profit and loss statement, they will write for the year ended 2024. They will or for the quarter 2024. Sorry, quarter 1 2024, because that is period is specific. Okay. So your P&L statement will give you the profit or loss for the period, which will include all your expenses and all your revenue. So revenue minus expenses is equal to your profit or loss. Okay, if your revenue is greater than your expense, you'll get profit. If your revenue is smaller than your expenses, you'll get net loss. So this is you'll get from the P&L statement. So this P&L statement you have to get from the SAP. Since you are using the SAP software to get your P&L statement, you have to make sure that you are getting the P&L statement from the SAP. If you are not getting P&L statement from the SAP, or you are not feeling comfortable what SAP is giving the P&L statement, that is where question mark comes. That is where question mark comes. People move from one ERP to another ERP. Okay, but we hope that it gives very good P&L statement. Second one is a balance sheet. Balance sheet basically, let's say looking at the profit and loss statement, you cannot judge about the business, because profit and loss statement, as I said, it is for the period, for one specific period. If you look at any startup, and for last 5 years 10 years they keep on making the loss, but doesn't mean they are bad business, they are good business. If you have ever heard the interview of the Amazon founder Jeff Bezos, one reporter has taken his interview and he mocked him. He said that you are reporting every year that we are 10% making loss, we are making 20% loss. What kind of business is this? That you are excited to show your losses year on year. Then he told that I'm investing in future. And see today Amazon. So looking at the profit or loss statement, you cannot judge the business. You have to look at the balance sheet, because balance sheet is a main thing which will give you the position, financial condition of the company. That basically records your asset, how much asset business has, how much patent they have, how much copyright they have, how much liabilities they have. So all these things you can analyze from the balance sheet, and balance sheet are prepared age on date. Whenever if you look at any company balance sheet, you will find age on. They'll tell age on this date, they'll write this word, they'll write age on 31st March 2024. What does it mean? It means that till this date, this is the balance sheet. It is not only for one period to another period, or this is not for one fiscal year. This is age on date. If I have purchased anything 10 years back, that is also I'm showing in the balance sheet. Mean age on debt till today debt. What is my financial position, that you can see in the balance sheet. So balance sheet also you have to get from your SAP. Okay, you have to make sure that your SAP software is giving correct balance sheet. Whatever figure SAP is showing, whatever asset it is showing, liability it is showing, capital it is showing, are correct and accurate. True and fair view. This word is very important. Huh? True, true and fair. In CA, this is 5 marks question. True and fair. Your balance sheet or all your financial statement must be true and fair. So you have to make sure that your SAP is giving true and fair balance sheet. Only that, you have to also get to know the cash flow statement. This is also one of the financial statement which will give you the cash position. It will help you to identify how much cash inflow and outflow of your business. Similarly, there is something called statement change in equity. So once your business grow, a lot of investors will invest in your business. A lot of shareholders will invest in your business. So you have to report who are the major investors. You have to report that. You have to prepare the statement change in equity, shows that who are the main shareholders of the company, because this is the also disclosure to the SEBI or in whichever stock exchange you have registered your company. You have to disclose them that these are our major shareholders. So that is known as the statement of change in equity. So how it is calculated? Let's say me and Venu. Venu has invested 100,000 and I have invested 50,000. So his percentage of shareholding is that, see, 100,000 divided by total capital. This plus this total capital, that is 150,000. So this is 66.67 percentage is Venu shareholding. My shareholding is 50,000 divided by total share, that is our 150,000. So my shareholding is this much. So this is known as a percentage of shareholders. Okay, this you have to report to the SEBI. And if you invest anything additional, let's say Benu invested additional money 50,000. So how you will calculate? Then percentage shareholders will become 150,000. His total investment 150,000. Then total capital become 2 lakh. So 150,000 divided by 2 lakh, 75,000. Now his shareholding increased from 66.67 to 75%. My shareholding got decreased. My shareholding got decreased because 50,000 is equal to here 50,000 divided by total capital is 200 percentage. So only 25% is my shareholding. Then if anybody withdraw, let's say Venu has withdrawn his 25,000 share capital. Now accordingly it will decrease. So 1 lakh his left share left capital amount is 1,25,000 and total capital 1,75,000. So this is how now this is his shareholding position. This is my shareholding position. Okay. He may sell his shareholding to someone else also. He can, I can sell my shareholding to someone else also. We can increase or decrease number of shareholders. So this is also one of the financial statement when you talk about financial statement preparation. Then another very important something called note to auditor. Whenever auditor do the auditing, has to write his feedback about the financial statements, or it is like note, or it is like comment. If you feel that anything he has to disclose which is not included in above this 4 financial statement, then he can write in the note to auditor. Note to auditor section is very important to read any company financial statement. It is very important because there you'll find very important information. And this is where a lot of fraud also happen. When it is not disclosed properly, shareholders will not be knowing. Let's say such information can be, let's say, if company has major litigation is going, major court case is going on, where if businesses lost the case, lot of penalty they have to pay to the government. Okay, or auditor feel that there is no proper invoice. Let's say business is saying that I have done sales of this much amount, but they are not able to business is not able to submit proper document. Then auditor has to disclose that business has shown this much profit, this much sales revenue, but they don't have billing document. They have to disclose this. So anything which is important, they have to disclose in the note to auditor. That is very important section. So this is also one kind of financial statement. So any business, main purpose of using the SAP ERP are these financial statements also, because other thing you prepare or don't prepare not a problem. Financial statement mandatorily have to prepare, because this has to be submitted to the government and all so many other bodies. So this is a mandatory. So whenever, at least when business deciding to use any ERP, they have to think at least this financial statement they are getting correctly or not. Because I have seen many client, they will complain that I don't want to use third party tool to report my financial statement. A lot of code I have to write to get my financial statement. So all this drama they do later. So they have to be very clear what they are looking for, and either that ERP is meeting their requirement or not. Okay, so this is the about the financial statements. Now once you understand the finance, any doubt is there in the financial statements? Anybody has any doubt in these financial statements? You know,
Okay.
right? No. Okay. So once you know the financial statement, then you have to know basic accounting also. So in college time you might have studied accounting means. So all this you'll get your P&L statement, you'll get your balance sheet, you'll get your cash flow statement. All this is possible when you do the proper accounting. If you are not able to do proper accounting, then all this will go wrong. Okay, all this will go to wrong. So you have to understand accounting very nicely. So whenever anybody want to learn the Fico course, they have to know the basic accounting. If they are not aware about the basic accounting, we have to give them first basic accounting class. So all of you are from the accounting background, or anyone is from the computer background, science background, something like that? All of you are from commerce background, right?
Accounting, commerce
Okay,
background.
Yes, sir.
Sir,
commerce
one
background.
question.
Yeah.
Can we able to see that the statements in SAP? No, even not now. Like
We'll see. We'll see. After
yeah.
posting our transaction, we'll see. Everything we'll see in the SAP.
Okay.
Okay.
Okay. Okay.
Yeah. So note down whatever doubt, whatever I'm telling, we'll see or we'll discuss later. I use this kind of word. So you please note it down. When right time will come, then I'll discuss that time. Okay. You have to remind me, huh? Okay, na?
Sure.
Now accounting cycle. So you know that accounting is process of recording the transaction, analyzing, then presenting to the stakeholders. So it has certain cycle, and that cycle you have to follow while doing the accounting. So first is a identify the business transaction. So in a business there will be lot of business transaction: purchasing material, selling goods, paying salary, paying rent, paying electricity charge, charging depreciation. Lot more transaction will be there. So you have to identify the either it is the business transaction or not. Okay, So it should be the business transaction. Once business transactions are identified, you have to post the journal entry. To post the journal entry, you have to know the debit and credit rule that we'll be discussing next. How to post, how to decide what will be debit, what will be credit, or what is called debit, what is called credit. Since you people are from commerce background, it will be very easy for me. Then preparing ledger, you have to prepare the ledger, then prepare the trial balance, then prepare the P&L statement and prepare the balance sheet. Okay, so this is known as a general accounting cycle. Then you have to understand some of the major terminology in the accounting. First is, let's say, expense. What is called expense? Anything which is spent on the business is known as a expense. I mean, any money which is spent to run the operation, to run the business, is known as a expenses. So expenses are basically categorized into two part, that is known as a operating expenses, is also known as a direct expenses. Another is a non-operating expenses, is also known as a indirect expenses. What is called direct expenses or what is called indirect expenses? This is very useful. This terminology are very impactful when you work for any manufacturing client. It is very important. If you are working for service based client, then it is not that important, but when you work for manufacturing client, it is very important. Okay, I have seen it's very important. They cannot report operating expenses into non-operating, non-operating into operating. There is compliance problem as well. So it's very important. Business will tell, but let me give you the general meaning of the direct expenses or operating expenses. Operating expenses or direct expenses means your major expenses which is directly associated with your production activities is known as a direct expense. Let's say I am manufacturing one laptop. So to produce the laptop, let's say I have set up one factory I have set up. So to produce that laptop or to make that laptop, what is the directly involved cost? What is the directly associated cost? So the labor who are assembling the assembling the assembling the laptop, their cost, the supervisor who is supervising the factory, the security guard who is there at the factory, or light which is used in the factory, all these are direct expenses which are directly involved in the manufacturing process. That is known as direct expenses. Indirect expenses means they are not actually involved in the manufacturing expenses, manufacturing place, but they are supporting. They are supporting. Okay, for the manufacturing. Let's say we have one head office. From head office, all the administrative work is done. So that particular building depreciation, that particular uh, mm, building staffs, those people salary, those people expenses are known as indirect expenses, who are not directly involved in the production but facilitating, are working for the manufacturing uh, place. I mean, they are supporting to the manufacturing. Okay, that is known as a indirect expenses. Is it clear what I'm trying to tell? Direct or indirect? Hello?
Yes.
Yes, sir.
Okay, right. So that is direct and indirect. So in SAP, direct is known as a cost element. If you really want to go by SAP, but since you people are accounting background, so I'll give little bit hint also, because anyway you know the accounting, so I'll try to familiarize with SAP. So indirect, I mean, this is direct in SAP known as a cost element. Okay, we say cost element, and this indirect in SAP we say non-cost element. We'll understand what is called cost element and non-cost element later. Similarly, revenue, anything which you have earned from the your business is known as a revenue. So revenue is also like operating revenue or direct revenue, non-operating or indirect revenue. Same is here also. If you are earning the revenue from your major business, then it is known as a, or from your major product, then it is known as a direct revenue. Let's say our operating revenue. Let's say I give an example of producing the laptop. So whatever revenue I get from selling the laptop is known as my direct revenue. But let's say I have some extra money that I kept in the bank and I got some interest. That is my indirect revenue because that is not my major source of business. Okay, that is my additional income. Unless say a company has invested in some other company and they got some dividends, so that is their indirect revenue. Okay, so direct revenue means anything which they are earning from their direct business or from their major product is known as a direct revenue. Let's say they have some scrap material they have or something, they have broken boxes and all, they have sold for some bucks, that is known as a indirect revenue. Is it clear? Direct, indirect revenue also. Hello.
Yes.
Yes, sir.
Okay. Similarly, you have to understand what is called net profit and loss. So revenue minus expense. If your revenue is greater than expense, then it is your profit. Your revenue is smaller than your expense, then it is your loss. So that is your net profit and net loss. Many a time business will ask you to bifurcate your total profit into operating profit and operating loss. So that time your operating revenue you have to reduce. If operating revenue minus operating expenses, you'll get the operating profit and vice versa. Okay. uh, and if your operating revenue, your operating revenue is greater than your operating expenses, you'll get operating profit. If your operating revenue is lesser than your operating expenses, then you get operating loss. Am I doubt in, am I clear or any confusion? You got it now what I'm telling? Hello.
Yes, sir.
Okay. Similarly, business may go for non-operating. So same non-operating revenue minus non-operating expenses. If your non-operating revenue is greater than your non-operating expenses, you'll get non-operating profit. Your non-operating revenue is lesser than your non-operating expenses, then you'll get non-operating loss. So this kind of terminology business will use, and you have to understand during the discussion with the with your business. Okay. Then so here asset, what I'm trying to tell, asset means uh, anything which is owned by the business is known as a asset. So here there are two kind of asset, fixed asset and current asset. Fixed asset are basically purchased for the using purpose, they are not purchased for the reselling purpose. Okay, then that become the goods. If anything you have purchased for the resale purpose, then that become good, that doesn't become like fixed asset, that become goods. So anything which you purchase for using purpose and generating the cash flow, that is known as a fixed asset. And fixed asset life will be generally more than 1 year. That is what the general meaning, okay, of the fixed asset. So fixed asset like machine, land, building, livestock, furniture, all these are known as a fixed asset. Current asset which has short term life below 1 year are known as a short term asset or current asset, like cash, debtor, inventory. These are the current asset. Okay, no doubt, right? In this one, then liabilities, anything which is, there is two word are very highly used. One is known as on, one is known as a ow. This one. So anything, so on is used for the asset. This word is used for the liabilities. Anything which business has the obligation to pay, then that is business liabilities. So there are two kind of liabilities will be there. One long-term liabilities which business has to pay after 1 year, that is long-term liabilities. Let's say share capital, bond, debenture, bank loan. All these are this long-term liabilities. Short-term liabilities which business has to pay within 1 year is known as short-term liabilities. Let's say creditors, then outstanding expenses, bank overdraft. Any doubt up to here, guys? No, right?
No, no doubts.